Good afternoon, everybody, and thank you so much for joining the Skeena Gold and Silver brief presentation today. My name is Galina Meleger. I'm the Vice President of Investor Relations. I've been with the company for about 9 months and admittedly have been involved in the mining industry for nearly 20 years. Before we start, I will be making forward-looking statements, so you are duly cautioned. And one of my favorite places to start is really looking at the history of Eskay Creek, because it is a past producing operation. It was formerly an underground mine that was owned and operated by Barrick from 1994 to 2008. And in its past life, it was considered the highest grade gold mine in the world. So it's an asset that some call legendary, being that it is so interesting, so phenomenal that people have written their masters and their theses on it, just with regards to the polymetallic deposit, the nature of the ore body being so rich. And the ore was so rich that the average mine grade was 45 grams per ton gold, and the average mine silver grade was north of 2,000 grams per ton. The ore was so rich that they actually processed it just by direct shipment of ore, and it wasn't until later years that they installed a process plant using flotation of gravity. Barrick placed it on care and maintenance in 2008. At the time, gold prices were about $800 an ounce, so a very different economic reality from where we are today. And the cutoff grade for this operation was 15 grams per ton. So when we started looking at it, the premise for Skeena under our management team was really what's left behind if the cutoff grade was 15 grams per ton. So we set work on Eskay Creek, which is our flagship operation, in 2017. And since then, we've done a significant amount of work to bring it to where we are today. We've put out 4 technical reports. We've outlined a 4.6 million ounce reserve. And today we can say that we are now in what's considered the development phase. So we are on the sweet spot of the development timeline, where we're just starting to invite re-rate capital ahead of final permits, which we anticipate by the end of this year. So top of the trees in terms of what we're doing with Eskay Creek is we're actually reconceptualizing what used to be an underground operation as a very, very sizable open pit. So we're going to be coming out of the gates with 450,000 ounces of gold equivalent metal produced annually in years 1 through 5. This is backed by a very, very strong grade profile. So as I mentioned, it was the highest grade gold mine in its past life, and it remains one of the highest grade open pit mines in the world at 5.5 grams per ton gold equivalent in the first 5 years of production, which is triple the global open pit average. One can appreciate that obviously when the grade is that good, the costs are very compelling. So bottom of the industry cost curve in terms of operating costs. And Eskay Creek will be a significant cash flow generator. So if we were to look at spot prices today, our projected annual after-tax free cash flow per year is north of $800 million Canadian, again in years 1 through 5. So significant cash flow. And there's a significant silver component. I'll speak more to that later. And this summer, we also announced a major step forward in terms of de-risking with project financing for about $750 million US with Orion Resource Partners. So Eskay Creek is situated in BC's Golden Triangle. If you're not familiar with the area, the Golden Triangle is known for immense geological potential. We have very, very strong operations in close proximity, as you can see, that are, owned and operated by companies like Teck and Newmont. We've got world-class projects in close vicinity, and we are situated on Tahltan territory. So that's the Indigenous group that we're working alongside with to bring this project into production. And because there is so much mining activity in this area, because there's so much mineral endowment, the Tahltan Nation considers themselves to be a mining nation with generations of mining activity in the area, even at the previous Eskay Creek when it was an underground operation. So we are really lucky from that regard. I would say that the Tahltan Nation is very business savvy. They understand socioeconomic benefits, and so they're a great partner to be collaborating alongside with to bring this project on stream, which is very, very important in British Columbia in the project development phase. And essentially, you know, if you can have the Indigenous on side, it definitely perpetuates the likelihood of you obtaining your permits in a timely fashion. And in our case, because it was a past producing operation as well, we have a significant amount of opportunities to basically fast track the permitting process. So one of the things that we are quite fortunate to have is that Barrick actually permitted a pre-existing tailings facility for us, which not only saves us $150 million off the CapEx, but I would say the timelines associated with permitting a new tailings facility, because that is usually a point of contention in these types of conversations. We've also got access to roads and infrastructure such as auxiliary buildings. And after Barrick shut down the operation, there was a private company that came in and installed hydroelectric facilities very, very close by, basically 17 kilometers away from our mine, which allow us to source electricity and sorry, I should say clean electricity for 6 cents per kilowatt hour. That is a significant advantage that we have as a company. Other parts of the province are getting electricity for 60 cents per kilowatt hour. And so when you think about it, okay, we've got a very, very high grade operation that is able to basically source electricity for a tenth of the cost that other mines are. This is one of the reasons I call this the Skeena advantage. This is one of the reasons why it will be such a significant cash generator. Okay, so just with regards to the definitive feasibility study that came out in late 2023. So this is a recent study that is driving our project path forward. We encapsulated inflationary pressures post-COVID, and we came out with some very incredible economics. So if we were looking at spot prices today, the after-tax NPV of the project is about $4 billion Canadian. The after-tax IIR is about 67%. And the payback period is 0.7 years. So that's about 300 days of operations once we get up and running to pay back the initial capital expenditure of $713 million Canadian. And I would just like to drive your attention back to the cash flow, because again, at spot prices, we will be doing about $800 million in after-tax free cash flow per year. Once in operations, if you're an EBITDA person, that's $1.3 billion in EBITDA per year. So definitely very strong financial metrics. The production profile is front-loaded, so we did that intentionally. And you can see that in years 1 through 5, the ounces and the grade are both elevated. And then in years 6 onwards, it dips off. So the reason why we did that is that we actually know that we have other satellite deposits within the portfolio that we can backbolt onto the production profile in later years to get the ounces and the grade up, as well as extend the mine life. I'll speak to that in a couple slides later, but The reason why we did this is because right now we are in the environmental assessment application phase, right? That is the formal permitting process here in BC, and this application process is based on the mine plan that's outlined in the DFS. So once we get on the other side of the EA, we can look to improve the production profile so as to not to confuse the regulators on the current plan at the moment. So when we talk about years 1 through 5 in life of mine, we know that ultimately we have opportunities to get life of mine up higher, and that's why we make the distinction. So I will take a couple minutes just to talk about the permitting process. It is definitely the biggest catalyst right now for the company, and it's where a significant amount of our focus and our time and effort is placed on right now. So the EA application phase is really done in two parts. There is an initial application, which takes 6 months, and you go through 3 rounds of comments. And then there's the final application phase, which also takes 6 months, and you go through 3 rounds of comments. So we have submitted our initial application in August of 2024. We just closed out round 3 of the initial comments, and we use those comments to inform the final application, which we are drafting as we speak. And we hope to submit the final application in mid to late March of 2025, which will then set us on another 6-month review period. So technically speaking, we could be in possession of an EA certificate in Q3 of this year, which is the biggest hurdle that a company such as us must overcome to say that they are in full-scale construction. And so this is definitely a very big catalyst. And for us as a company, we feel very confident in the permitting and the feedback that we've been getting to date so far. We've received 2,000 comments on the initial application, and nothing that's come back has been shocking. We've been addressing all of the issues and been moving forward on the projected timeline. I should also point out that we're doing something that's pretty precedent setting with regards to our permitting, in that, so first of all, we receive federal substitution, which means that all the permitting is done on the provincial side. And we have actually granted the Tahltan signing authority on the final approval of these permits, meaning that, you know, they're being empowered to basically give us consent. And again, that's something that's really, really cool and speaks to the collaborative relationship that we have with the Tahltan Nation. So the project financing that was announced this summer was a significant milestone. It was for 750 million US, which is over $1 billion Canadian, again, against a projected initial capex of 713. So we are overfunded from that regard. We went with Orion Resource Partners for all of the components. And we went with Orion because they were willing to give us a significant amount of capital ahead of final permits, which some of the other contenders were not comfortable with. But the reason why Orion was comfortable in doing so was because they had been successful with financing Pretium, who owns Brucejack in close vicinity to us. So they got comfortable with permitting timelines and geology. And they were really keen to be a part of our journey in bringing this to the market. So within the financing, there was an equity piece for 100 million. That was the smallest component out of the others, and it was done at a premium to market as opposed to a discount, such as you would see with your traditional bought deal. The gold stream for 200 million US, there's a buyback provision where we can essentially buy back 2/3 of the stream at an 18% imputed IIR once we get up and running, so that we maintain flexibility and don't encumber or handcuff the company in the event of an M&A situation should one present itself down the line. And the gold stream for 200 million, we announced our first draw at the start of this year, And so basically it'll be $50 million tranches that we draw down over the course of 2025, which will fund the development activities that we have planned for 2025. So the gold stream will see us through to the end of the year. And these two components, the equity piece and the gold stream, were the funds that were given to us ahead of final permits. Before final permits. There is also a senior secured debt facility for $350 million at SOFR plus 7.75. There's also a 1% standby fee and no break fee, meaning that between now and drawdown on the debt, if we find more favorable terms in the marketplace, we can go ahead and swap that out with something that has a better cost of capital. But what we like about this financing package, and equally what the market also liked about it, is that we can actually come out and say, we have the necessary funds to see us through to production, but we also have optionality and flexibility to continue to improve the terms of the financing for our shareholders going forward. In terms of positioning, we are one of the highest grade open pit mines in the world. So again, you can see how we stack up in years 1 through 5 versus life of mine. This is in the top decile of some of the highest grade open pit mines in the world. Again, at triple the open pit global average. And in terms of positioning, you can really look at the operators of some of the highest grade gold mines. It's companies like your Barricks, your Newmonts, your Goldfields, right? So all of your industry leaders. So you can really see why this asset is significantly desirable. And in terms of size, we've got 4.6 million ounces of gold equivalent metal in reserves. And within that, 80% is in the proven category. So one of the highest levels of confidence. The value split on Eskay Creek is about 65% gold and 35% silver. But because of how big it is, that 35% byproduct credit on the silver actually makes it a very significant primary silver mine globally as well. So again, in years 1 through 5, we're going to be producing 9.5 million ounces of silver, which is very compelling if you look at some of the largest primary silver mines in the world, which for the most part are located in Mexico, and we're located in BC. The silver component is quite important to us because we see an opportunity to further propel our re-rating. We know that the silvers can command higher trading multiples. And also it's a meaningful byproduct credit on our unit costs. So in the definitive feasibility study, when we look at AISC and we deduct out the cost of the silver, the all-in sustaining costs were about $300 an ounce net of the silver byproduct credit. So again, a very, very impressive metric. And because we have a relatively tight share count of about 107 million shares issued and outstanding and 88 million ounces of silver in reserves, we actually offer more silver per share than most of the primary silver miners in the silver mining sector. So yet again, another reason why we feel that we can continue to propel our re-rating. So valuations, we get asked this all the time. Ultimately, what is the company worth? And how much more upside remains? Am I late to the party? And it's actually a very straightforward question to answer because there is not a lot of companies that have a single asset that will be producing 450,000 ounces of gold equivalent metal. There's only a few that we can look to for comps. One of them being Lundin Gold with Fruta del Norte. So very similar production profile as Eskay Creek. They're a cash flow story. We're a cash flow story. They are trading at a healthy PNAV of 1.4 times and a market cap of close to $10 billion Canadian, whereas we're sitting at a market cap today of 1.7. We also look at Artemis Gold. They have their Blackwater mine that is commissioning as we speak. Similar production, but I would say they're lower grade. And again, they're sitting at a market cap of about 4 billion and trading at a PNAV of 0.6. And then there was also the Eskay acquisition, which is just another lower level comp for the Windfall project, acquisition price of $2.5 billion Canadian, much smaller in terms of size for production. And Canadian pre-permit assets, so earlier on the development timeline than us. We use a framework called the Lassonde curve because you can see how our stock has literally followed it to a T, meaning that we made a discovery and the stock went up. We announced a feasibility study and the stock went down because investors start going, well, how are you going to finance it? Will it be dilutive? We announced our project financing and it was not dilutive. So now our stock is climbing what we call the heart of the Lassonde curve. And the way that we continue to work our way up this curve is by getting closer to cash flow. And so right now we're sitting at a PNAV of about 0.4 times. And so when we look at a world-class asset like Eskay Creek, we, conservatively speaking, can say that we can get to 1 times NAV on the gold and 1.2 times NAV on the silver. So from where we are today, there's an opportunity to go 3 or 4-fold. And that is the best way that we can articulate the valuation upside. And the biggest catalyst for us will be the permitting. So getting to the other side of the EA, and we expect that to occur in late 2025. Quick walkthrough of the model, and here's a look at the operation. So we will be mining in this direction. You can see that the ore is relatively close to surface. And here's a look at the new mill that we'll be building. And one of the things that's really impressive from my point of view is that we've added a tertiary regrind right into the flow sheet. This was one of the changes from the feasibility to the DFS. Keep in mind that we can do so because we have low cost, clean power. And one of the areas, something that I've been touched by personally in my career, is companies having difficulty estimating the cost of grinding hard ore. And it's a very energy intensive business, so it's expensive. This happened to me at another company that I worked at where the ramp up was extended for 2 years for this particular reason. So, you know, I think by us going in and installing this tertiary regrind into the flow sheet off the bat, it's yet another layer of confidence that we can have in our mine plan and our development plans going forward. Here you can see the tailings facility just up the road that's permitted, and it's more than ample capacity for the life of the mine. It's subaqueous disposition, so one of the safest forms in terms of safety management and slope stability for tailings. I will just talk briefly to the upside. Our current model has only included the gold and the silver in the deposit, but it is polymetallic. We've got significant quantities of antimony, lead, and zinc that will just continue to increase our payabilities in the concentrate. And we'll be coming out with an updated study again on the other side of our permitting to monetize these critical minerals. And this will be a pretty significant piece of the story. If prices are where they are today, this could add another billion to NPV. So very, very meaningful, and is something that we're working to monetize at the moment. We've also got the Snip deposit, which is 40 kilometers away from Eskay. It's high grade, 9 grams per ton gold. And this is the satellite deposit that I mentioned in the production profile that we can backbolt in later years. We intend to truck the ore over and process it at the Eskay Creek mill. And lastly, very strong capital markets profile. So again, 107 million shares issued and outstanding. That's very impressive. That's very strong equity management. Over 75% institutionally held. I look at these names and I am seeing some of the best in the mining space positioned in our company for the long-term upside. These names want to see us advance up the Lassonde curve. Notably speaking, there is a company called Helicon, which just recently took an 8% position over the last 5 months. They're a big generalist fund. And a company called Blackstone just recently took a 7% position through the syndication with Orion. Again, a generalist, a name that the last time they were in the mining space was 2015 to 2017. So one, positive for the mining sector, and two, positive for Skeena. We've got 11 banks that cover us on the Canadian side. And I will just leave you with a little bit of the leadership team, because I feel like every company says that they have a strong management team. It's very important in the mining space, but we certainly have a world-class team. So Walter Coles, he's the executive chairman. Skeena is, a company that he founded. It's his baby. He orchestrated the financing package. He is very financially sophisticated. And, one of the key reasons why we can say that we have only 107 million shares outstanding. There's Randy Reichert, which is our chief executive officer, over 40 years experience in the mining space, and was previously involved with B2 Gold, Fekola and Kupel. And I will just make a note out of Naylene Moran, VP of Environmental and Regulatory Affairs. She is Tahltan. And she is driving our permitting team forward. And she used to work for the lands department, giving companies like us permits on the other side. So definitely a very strong addition to the team. And yeah, thank you so much. That was just a little bit of an introduction to the company, but if you ever want to learn more, we are always available for follow-up questions. Thank you.